Hello ICT traders, welcome back to the channel. So a quick one, somebody asked me in the comments to explain ICT NWOG and NDOG. I'm going to explain it in this particular video and show you how to spot them on your chart and how to even use them for trading. So let's get into the video. What exactly is NWOG and NDOG? The word NDOG stands for New Day Opening Gap, and then NWOG stands for New Week Opening Gap. And this happens mostly in the futures indices. If you're trading currencies, you may not often see them there. They are mostly found in the futures indices such as S&P 500, US 30 and other indices. So let me explain them to you. Even if you're trading currencies, you may see these things some of these days occur, but they don't often occur in the currencies market. All right, so let's get into it. NWOG and NDOG. Now NWOG is the gap that happens between Friday, the closing of the market, and then Sunday, the opening of the market. This is an example of a classical NWOG. I will show you all of them, and I will show you an indicator that will help you to spot them clearly. New week opening gap. It happens mostly during the weekends, and then when the market opens on Sunday, you're going to see the market jumps either to the upside or to the downside. And that is the gap that ICT calls NWOG. So this is it. You can actually see this gap here. If you extend it, this is the gap. This is a new week opening gap, and it happens between Friday, the close of market, to Sunday. All right, that is the gap. You're going to see it on your chart time and again. So when market opens on Sunday, it jumps, and then you're going to see it. It doesn't happen every week, but once in a while you're going to see it on your chart. So this particular area, price will want to come back and fill it because that is an imbalance. All right, and if you extend this to the end, you're going to see how price retested it time and again. Price coming back to retest it, to retest it, to retest it. All right, it happens within this Friday and Sunday. The gap is what we see right here. This is Friday, the close of market, and then on Sunday price jumps, it opens right here. So this gap is very important. That is NWOG, new week opening gap. And then NDOG stands for new day opening gap. Let me show you an indicator that will help you to get that. ICT NWOG by Lux Argo, this one. All right, you're going to see it. So this particular indicator will help you to spot them. You can select show NWOG or NDOG. So I'm showing NWOG right now. I want to see just one, okay, per week. So this is it. You can actually see NWOG here. So price used that level as a support level. Let me go back to that, please. Price actually used it as a support level, and price kept on retesting it even in the future. Let's see if price really did came back. All right, there is another one up here, and this is a bullish NWOG and this is a bearish NWOG. Let me show you that right here. You can actually see that this is Friday. You can see it from my cursor, Friday the 27th of May, and this is let's see, Sunday the 29th of May. This gap is the NWOG, and you can see price after crossing below it, price is using it as a resistance here. Here is a very, very powerful area that you can take notice of. All right, you're going to see it time and again. So this is an NWOG. So if you're taking trade, you should take notice of these areas. If you see any of them on your chart, you should know that those areas are very important. You can see a bullish NWOG and this is a bearish NWOG. So let's see if we can see an NDOG, new day opening gap. Now for NDOG, it is the difference of price between the close of price from 5 p.m. New York time and 6 p.m. New York time. 5 p.m. New York time and 6 p.m. New York time. That is where you can see an NDOG. All right, so this is an example of an NDOG. Let me show you that. You can see the indicator has already identified one right here. This is an NDOG. So let me even put the time for you. For NWOG, you will need to see the difference of price from Friday and Sunday. That's the gap. While NDOG is simply the difference of price between 5 p.m. the close of the market and 6 p.m. New York time. All right, this is New York time. You can convert it to your time wherever you are and see exactly what time is it. So this is the condition to see it, and you can actually see one right here. Let's zoom it in. Can you see this price actually jumped from here? This was the close. You can see this is Wednesday, the 1st of June. That's 1600 hour, and this is it, 1800 hour. So this is it. You can see the gap right here. So that is an NDOG. It's a very, very powerful level that price will want to come back. You can see price coming back to test it. Another one right here, we can see from that indicator. You can see it. So every time price comes back to the area, you can see either price have a hold there, or it builds either a resistance or a support. Now among these two, I prefer to use the NWOG because it is more powerful than NDOG. All right, the NWOG is more powerful than NDOG to me. So these are the terms. Basically, you're going to see it mostly on futures indices. They are seldom seen on currencies, so you can go ahead and check them. You can backtest it just for you to know how these things operate. And that is all about this video, guys. If you have any question, let me know in the comment. I will be there to answer you. Thank you for watching, guys.